makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London, standing in for Francine Lacqua. Here's what's coming up on today's program. European shares mixed against the backdrop of higher for longer U.S. interest rates, as well as the property crisis in China. Over in the States, the FTC files a landmark lawsuit against Amazon, accusing it of monopolizing online marketplace services. Will bring you any pre-market moves that we see. Plus, the ECB hawk Robert Holzman telling Bloomberg it's unclear whether the central bank has lifted borrowing costs to their peak. We're going to bring you more of our interview throughout the hour. With a quick look at how European markets are faring, a quick check on the map, because green on the screen across the board. This is really interesting, especially as we get some data coming out. The euro area August loans to companies rising about 0.6 year over year. Now, look, this usually isn't that market moving. You're probably not seeing a big reaction off the back of it, but it is good to know that that loan growth is there on a year over year basis, because at the end of it, it does actually matter from a macroeconomic perspective just how much loan growth and by extension economic growth you are actually seeing. When you look at the maps, though, you are seeing some outperformance, specifically in the CAC 40, the French index higher by 0.3%. Again, I wouldn't call it major movement to the upside, but you are seeing sentiment actually increase. And this makes sense because the backdrop lately around the world has been sell, sell, sell. So naturally, you are kind of entering a point where you have to perhaps buy the dip. And that feels like some of the sentiment driving the European trade right now and potentially setting up the trade in the United States as well. Let's get you some of the major charts we are watching this morning because, of course, the FX story is top of mind, specifically around the Swissy. So I bring you this chart. Essentially the idea that, of course, last week we were surprised by the S&P that they were actually hitting pause on those rate hikes. What that does, though, is remove the impetus, remove the momentum for actually diving in to the Swissy. No longer do interest rate differentials actually favor the currency, which is why you are actually seeing dollar Swissy stronger and stronger for, I believe, 11 sessions now. This is its worst run, going all the way back to 1975. It tells you that again, if you start to pause rates in Switzerland, in the rest of Europe, suddenly that does actually create another tailwind for the dollar, which brings us to the ripple effects here. Because if you see a stronger dollar, what is the first commodity that gets hit? Well, we all think oil, especially on the march to $100 a barrel. Here's a chart that shows you why we're getting closer and closer to $100 a barrel, with oil at, I believe, $95 right now. Actually, the inventories are a big part of it, specifically in the United States. Look, it is their lowest, going all the way back to July of 2022, really speaking to the physical tightness you are seeing in the market. Going cross-asset, though, oil higher usually should mean risk sentiment is higher, too. That is not what you're seeing in the equity market, specifically when it comes to the tech story. And that's really where I want to go next. The idea here that tech is actually entering a correction. That means, yes, a 10% drop from its peak back in July. In the broader index, a 7.2% decline. Now, what that means, though, is simply that as we get to the bigger and bigger declines, the selling accelerates. Does that make sense from a fundamental point of view? Well, some might argue maybe, especially with the news that we got overnight coming out of Amazon. The FTC suing Amazon in a landmark antitrust case over in the marketplace. What's interesting, though, is that even though in yesterday's session with that news, the stock dropped about 4%, dragging down the entire index, in today's session, higher by 0.4%. Is that a positive sign? Well, some would argue it's simply buying the dip. And remember, every time a lot of these cases have hit the antitrust story from the FTC, the stock hasn't actually suffered. You see that time and time again. Does that signal some sort of faith in terms of the FTC's success rate? Or do people just not care? Who better to ask than our next guest? Maria Municchi joins me right here on set, fund manager over at M&G Investments. Let's start there, Maria. The tech story. We're talking about all this antitrust regulation. How much of that matters in an environment where selling has really snowballed?
I think tech has been extremely interesting this year, especially after the behavior of 2022, where many investors were worried about the sector in an environment of rising interest rates and how that might affect valuations. But really what we've seen in 2023 is a complete different story. Interest rates were no matter anymore for the tech sector, and really the artificial intelligence focus has driven a lot of the sentiment in this area. We've certainly seen a bit of a softening of that narrative. I mean, if we look at individual stocks like Nvidia, which have done exceptionally this year, the last phase, they're starting to weaken again. But this is also in the context of a market that has become probably more complex over the summer months, with investors paying more attention to what higher for longer might mean from a rate perspective, and therefore affecting both fixed income and equity markets.
Yeah, a dynamic you're seeing really around the world. This is no longer just a U.S. story, European story. Everyone now suddenly on the same page. But when you do look at the equity market, both in Europe and in the U.S., it's pretty normal to see pullbacks of 2-3%, even 5% a couple of times a year is fairly normal. A 10% correction in tech, a 7.2% drop from the July peak. Is this a bear market in the making?
Well, I think we also have to consider where we're coming from, right? The uptake in the beginning of the year, the first part were extremely high, more than double digits. We've seen some companies, high, increasing more than 100%. So, if we put that drawback in context, we might see a slightly different picture. And it's no surprise that the tech has been driving a lot of what has happened in other markets as well. But what has been particularly interesting this year has been differential behaviors across different regions and across different sectors. Tech being one, but also if we look at a more regional perspective, we've seen regional equity performed very differently, with Japan being a very interesting area where we have seen opportunities in the first part of this year, and that have continued to rally and do very well, specifically in sectors like, for example, Japanese banks.
I was going to say, right off that potential interest rate move, I should say, out of the BOJ, suddenly Japan investable again, it feels. Well, Maria, stick with us, because in addition to all the technicals and the fundamentals you just talked about, a little bit of geopolitics getting wrapped into the story. The U.S. government on track for an October 1st shutdown, despite incremental progress late yesterday in the House and Senate on rival spending bills. Joining me now, Bloomberg's Bruce Einhorn, joining us for a little bit more context. Bruce, we're heading for a shutdown. What's the update?
Well, on the Senate side, there's progress being made on a bipartisan bill. They're likely to vote on that sometime over the weekend. That would be a continuing resolution, so that would keep the government open sometime until around mid-November. That would give them more time to work on a more longer-term fix to the issue. That would include disaster relief funds. It would include aid to Ukraine, not as much as the Biden administration has asked for. However, the problem is that at the moment is a non-starter in the House. And the thing to remember there is that Kevin McCarthy, the Speaker, has a very small majority, only a handful of seats, can't afford to lose any votes. And one of the things that he agreed to at the beginning of the year in order to get the speakership was a concession that would allow any individual House member to put in a motion to vacate the chair, in other words, to get rid of the speaker. And there's a group of Republicans in the House who are opposed to any continuing resolution, who have vowed that if there were to be a bipartisan bill that Kevin McCarthy allowed to go forward to get a vote and would almost assuredly pass, that they would then launch a move to depose him as Speaker. So at the moment, there's a bit of a stalemate among the Republicans, that there's no agreement in the House about what to do, and therefore most likely there is going to be a government shutdown. The big question then is, how long does it last? We've been through several shutdowns over the years. Typically what happens is the pain builds and one side eventually agrees to compromise and they move on. So we'll see what happens this time, Kriti.
I mean, the jury is still out. It could go in any direction. Bruce Einhorn, thank you, as always, for the update, joining us on that crucial story. Let's bring back in Maria Municchi, the fund manager over at M&G Investments. Look, Maria, Bruce just said it. This government shutdown kind of looks like it's coming. It's on the cards. Things aren't looking super rosy there from a political perspective. Moody's had warned this past weekend that if indeed we do see this government shutdown, suddenly the odds of a credit downgrade get way, way bigger. And of course, we know Moody's is really one of the only holdouts over a decade later from the 2011 kind of AAA downgrade as well. The reaction off that back in 2011 was defensive. Everyone around the world went in, dived into the bond market. Do we see that happen again if Moody's downgrades the United States?
Well, I think it's quite interesting in terms of trying to understand, on the one hand, what the practical consequences of that will be, and of the U.S. shutdown in general, so for the domestic economy, but also more from, like a behavioral standpoint, what might that mean if you have a prolonged U.S. shutdown, and even worse, if you have an effect on credit rating for Treasuries. And I think potentially we are already seeing some of that nervousness in markets more lately. We have seen quite a significant move on the US curve. In particular, we have seen that happening at the long end of the curve. And yes, of course, we could justify that by saying it's about higher for longer, is investors trying to work with this highly inverted curve and trying to understand what higher for longer actually means. But when we look at maturities like 30 years Treasuries, there is potentially some nervousness also linked to the creditworthiness of Treasuries per se. And I think given some of the rapidity of the moves that we have seen, specifically past the 4.5% level of yields, there might potentially be some opportunities there for a relief should things go smooth from a U.S. shutdown perspective.
Is this that moment at the end of the day that is the catalyst for bond bulls to really go back to being in the driver's seat? I feel like that's going to be the question. Maria Municchi, fund manager over at M&G Investments, thank you for joining our program this morning. Coming up, Italy seeking to turn Banca Monte Paschi into the country's third largest bank. We're going to find out why next. This is Bloomberg. The conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. Now, Italy speaking to turn Banca Monte Paschi into the country's third largest bank by merging it with one of its peers. Bloomberg has learned that the government is holding informal talks with advisors. Meanwhile, the Italian government presents an update to its budget outlook later today. Bloomberg understands Prime Minister Giorgia Meloni is paring back her ambitions to bring Italy's deficit towards the EU's 3% limit next year. Now, a lot going on in Italy. Who better to parse it all with us than Bloomberg's Rome Bureau Chief Chiara Albanese. Chiara, a pleasure to have you on the program this morning. Let's start off with the Monte Paschi deal specifically. Talk to us about the logic here. We know that this is a bank that has been nationalized for a while, then brought back into the private sector. Why this merger and why now?
The government has to sell its controlling stake in Monte Paschi by next year, and this is a very clear deal that it needs to do. But now it is going further. So Giorgia Meloni wants to leave a mark and make this deal into a signature of her government. And the way she wants to be is to create a new banking group that would rival Intesa Sanpaolo and Unicredit. Now, while the plan is very clear and is very ambitious, it is at the moment very hard to implement because there are no buyers for the bank.
Certainly a tough one, but I mean, what a comeback if this is indeed executed for, I think, one of the world's largest banks, or if not the oldest bank that we have seen in Europe and potentially the world. Chiara, at the same time, we're seeing Giorgia Meloni's government also presenting its budget today. We know that money is a really big issue for really all the governments in Europe. What could come from today's budget update?
So there are two numbers to look at, and the first one is the deficit that is going to be presented for next year, which is likely to be up to 4.5%. We reported yesterday. Now, the other element we really need to look at is whether it is on a descending path from this year, and this is set to be the case, and this is set to be very welcome by the European Union.
What does this then do for the bond spreads? I mean, we're watching this very closely, the French budget as well later, and the impact into kind of the Bund spread and the French debt as well. But BTPs are also the risk factor. What is the BTP read-through?
So the BTP and investors have been, until the summer, quite positive on Italy. They were reassured by Meloni's government and the measures it took. But at the moment, they are growing increasingly edgy for a few measures, but also due to the spiraling debt that Italy has. So clearly, if the budget will not reassure them, we should definitely expect a move in the BTPs tomorrow and after markets will open after the budget.
We'll certainly keep an eye on that. Major market moves. Bloomberg's Chiara Albanese all over that story in Italy for us. Thank you for joining us this morning. When we're just talking about the Bund BTP spread, Chiara talked about the BTP side. Let's talk about the Bund side. ECB hawk Robert Holzman saying it's unclear whether the European Central Bank has lifted borrowing costs to their peak. Holzman spoke to Bloomberg's Zoe Schneeweiss. Take a listen.
Inflation is full of surprises. And as a result, we cannot say for sure now we have reached the peak and no more increase. The reason is that the inflationary pressure is still on, and that just these recent days we have seen how much energy prices have surprised us.
Zoe Schneeweiss joining me now for more on that interview. Zoe, let's start with kind of the hawkish narrative here, this higher for longer conversation. I mean, the markets are very confused about just how sustainable that dialogue is going to be. Your take on those comments?
So Holzman obviously is an expressed hawk. He's one of those most hawkish members of the governing council, and he wants to make very clear that this hike, which a lot of market participants and also a lot of his fellow governing council members do see as the final move in this rate tightening cycle, that more could happen. He is in particular worried about inflation. As you see, he mentioned energy prices. We've been this threat of $100 oil is back, and that's one of those things that might just force the ECB. At the same time, he does say force. It's not like he wants another hike. He just thinks the inflation data might force the ECB to do something.
So that's the hawkish narrative, to your point. Let's talk about rate cuts here. I mean, rate cuts are something that have been kind of pushed off the table, at least in conversation, by President Lagarde herself and, frankly, around the world. But, Zoe, what is the case for rate cuts and where could they be built?
So I did ask Robert Holzman about this yesterday. He said, and that is a narrative that makes sense, that if there are rate cuts, that would mean that the economy is in dire straits, that the economy cools down so much, goes into a recession, and that then in turn means that inflation, that feeds through to inflation, and inflation then finally goes under those 2%, is low. It goes so low that something has to be done. As you mentioned, markets expect this in about July. Some economists also say June or July might be possible. Most of them, though, say it'll take a bit longer. There even are a bunch of economists who say that rates will stay steady all through 2024. So that would be quite a high rate peak.
I mean, the timing is really interesting here. You're saying kind of June and July of next year. You talk to a lot of economists, and they're saying that the recession calls are in the back half of 2024. So arguably, the markets are pricing in that the ECB and the Federal Reserve alike are actually going to be on it this time. Bloomberg's Zoe Schneeweiss, we'll see if that actually pans out. Thank you for the interview, and thank you for joining us this morning. Much more ahead. Stick with us. This is Bloomberg. The conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. Now let's get to some of the other top stories that we're watching on the Bloomberg terminal. JP Morgan has announced 2 more settlements to resolve legal woes over its banking relationship with the deceased sex offender Jeffrey Epstein. The biggest U.S. bank has tentatively agreed to pay $75 million to the U.S. Virgin Islands and also reached a confidential agreement with former executive Jess Staley. The lender also settled with Epstein victims for $290 million back in June. Sticking with U.S. banking, bank deposits have declined year over year for the first time in data going back to 1994. Following a tumultuous period for the banking sector, total deposits at U.S. banks ended the year at around $17.3 trillion, down about 4.8% from 3 months ago. S&P Global Market Intelligence says higher interest rates incentivize depositors to withdraw cash and seek higher yielding alternatives. And in New York, a judge has found Donald Trump liable for fraud, a major blow to the former president in the biggest civil case he faces. Trump is accused of exaggerating his net worth by billions of dollars a year on financial records submitted to banks and insurers, both of which he denies. The ruling resolves the state's biggest claim against President Trump ahead of a non-jury trial set to start as soon as October 2nd. OpenAI is reportedly talking to investors about a potential share sale that would value the startup at $80 to $90 billion. The Wall Street Journal says the valuation would be almost 3 times what the company was worth earlier this year. The deal would allow employees to sell their existing shares instead of the company issuing new ones to raise fresh capital. And in the U.S., retailer Target is closing 9 stores in 4 states to stem losses from rising retail theft. The company has been fuming on its earnings call for more than a year about losses from theft, which are adding pressure on slender profit margins. In May, the company said inventory losses from external and internal theft would be $500 million worse this year than the last. Another story we're watching on the corporate space is, of course, Amazon. We're watching those shares very, very carefully as they are higher 0.2%. What's important to keep in mind here is, look, the FTC has come in overnight and said that Amazon is basically in violation of U.S. antitrust law. But remember, this is something that a lot of people were expecting from Lina Khan, the head of the FTC, as she actually wrote her thesis on it. Does it impact the stock? Well, it did yesterday. Let's see if it does today. More on that after the break. Stick with us. This is Bloomberg. European shares are higher despite the backdrop of higher for longer U.S. interest rates and, of course, the property crisis in China. The U.S. FTC filing a landmark lawsuit against Amazon, accusing it of monopolizing online marketplace services. Plus, ECB hawk Robert Holzman tells Bloomberg it's unclear whether the central bank has lifted borrowing costs to their peak. We'll bring you more of our interview throughout the hour. Good morning and welcome to The Pulse. I'm Kriti Gupta in London, filling in for Francine Lacqua. Some breaking news here. Mitsubishi Motors now is saying they're going to end their production in China, that according to the Nikkei. When you look at the immediate market reaction, remember they are listed in Tokyo, so those markets are closed, but you are seeing them listed in the U.S. as well. Not any major moves coming off of the headline, higher by about 0.6% on the ADRs, which I'm reminded are not very liquid at this moment. But again, significant that we are ending production in China. Is that something they set the tone for with some of their peers? We'll bring you the news as we get it right here on The Pulse. Now to one of the major stories from the overnight trade in the U.S. The U.S. FTC has sued Amazon in a long-anticipated antitrust case, accusing the e-commerce giant of monopolizing online marketplace services. In a complaint filed in federal court, the FTC and 17 states have accused Amazon of stifling competition and overcharging sellers. Take a listen.
These are a set of tactics, but ultimately Amazon has pursued them to deprive actual and potential competitors of the ability to gain the scale and momentum needed to effectively compete online. And having achieved and protected its monopoly power, our complaint details how Amazon is now exploiting that monopoly power in ways that harm customers.
And Amazon, in return, has promised to challenge the lawsuit, saying it's, quote, wrong on the facts as well as the law. Let's bring in Bloomberg's Valerie Teitel now. Valerie, all over this story. Look, this isn't the first time the FTC has tried to hit tech with, I think, a very low success rate. What are the odds this is something that actually tanks Amazon and the markets?
Well, look, the markets, at least analysts, are pushing back on the notion that this could lead to a breakup of Amazon. But you're correct, Kriti. This is the 4th lawsuit that the FTC has brought to Amazon just this year alone, and perhaps underscores the determination of the Biden administration to put the growing concentration of corporate power, especially big tech, at the heart of their economic policy. But this is a sweeping antitrust lawsuit. It's focusing on a very different cornerstone of monopoly law, which is prices for consumers. The previous lawsuits against Amazon from the FTC have focused on very narrow parts of their business, whether it was the Ring camera or the Alexa voice assistant. This one is sweeping, and it is, as you mentioned, long awaited. We knew that a lawsuit like this was in the works. Essentially, the FTC is arguing that Amazon blocks marketplace sellers from competing on price, keeping prices artificially high. for consumers. And there was a statement from Khan, which I found very insightful. She claims that Amazon collects $1 of every $2 from sellers on the platform, effectively resulting in a 50% tax, 50% Amazon tax, which is then passed on to consumers. Now, the FTC didn't outline any specifics of the possible remedies in this case yet. If it wins the case, it could ask the judge to restructure the company, which could possibly end up in a divestiture of its logistic business. However, a lot of analysts on the street are pushing back on this notion, saying this is a years-long case that we have at our hands. It could take years to play out, and even Bloomberg Intelligence thinks if the FTC does win this case, they don't believe a structural remedy such as a breakup of the company would be the solution.
I'm surprised it took this long, frankly. I mean, we kind of knew this was, you said it, we've known this is coming for ages. Lena Khan wrote about it in her college thesis, both at Yale Law School. So when she was appointed, the expectation was that that would be the very first company she goes after. What are the odds here you actually see a breakup of Amazon?
Look, even if we do get to that point, it's not going to be, at least for a few years from now. That is what we're hearing from analysts across the street. They're really trying to water down the potential that Amazon could be broken up by this lawsuit. But that is the big risk, I guess, at case that Amazon does have to deal with. We did see shares yesterday in Amazon fall 4%, but the market was trading very, very weak yesterday when this headline did come out. It's interesting to see that in pre-market trade, we are rebounding somewhat. Amazon shares are up 0.25%. But, however, the drag on tech shares and this I guess this umbrella of the FTC pursuing big tech is not a good thing when it comes to an outlook for the industry. And if we look at the S&P 500, the information technology sector specifically, Critty, it did enter a correction yesterday after these headlines. It is now down 10% since its peak.
I mean, it's a fascinating story, truly. And I also have to, I think, remind our global audience is that when you look at these antitrust cases, they're usually not immediately priced into the market. And I think Microsoft set that tone back in the 1990s for antitrust lawsuits. Bloomberg's Valerie Teitel joining us on this crucial story for the markets and for U.S. law. And speaking of, U.S. President Joe Biden has endorsed the United Auto Workers' demands for a major wage increase during a visit to a picket line in Detroit, telling strikers to, quote, stick with it. Joining me now, Bloomberg's Oliver Crook. Ollie, this is the first time a president has ever really joined a picket line since, I think, almost the mid-1900s. What did we actually hear from the president?
Yeah, it depends who you ask. Some say, really, this has never happened before. So really, this was kind of, we heard it from Trump, from Biden, I should say. Trump is a little bit later in the day. Some of the refrains that we've heard throughout this entire debate, which is basically the auto workers saved these big three during the crisis, and that they need to now benefit from the success that they've seen since then. Why don't we have a listen to Biden, get a little bit of the atmosphere there in Michigan?
Wall Street didn't build the country. The middle class built the country. Unions built the middle class. That's a fact. So let's keep going. You deserve what you've earned, and you've earned a hell of a lot more than you're getting paid now.
And later on, he was asked by a journalist, should these guys be getting a 40% raise? And he says, yes, they should be able to negotiate for that. Then you also had Elon Musk on the sidelines on X saying that these 40% raises, these 32-hour weeks, of course, he does not use labor for that's unionized, so he does have much lower cost base, that these will put these GM, Ford, and Chrysler in the bankruptcy fast lane. So Trump is later today. He'll be speaking in Detroit. He'll probably be slamming Biden for the EV policy, saying that this is really the real threat to the auto sector. Sean Fain not really buying that. Sean Fain, the leader of the union, standing there alongside Biden, smiling, and he will not meet Trump. But really the question is not necessarily the leadership of the union, the constituency of the union. What will inspire them more? Is it going to be these questions about union power, or is it going to be some of the social and cultural issues that have really divided the United States?
I wonder if this is leading to an endorsement ahead of the 2024 election. Let's stick with the car theme, though, Ollie, and talk about the Bloomberg scoop on Tesla emerging as the focus of the EU's anti-subsidy probe. What do we know there?
That's right. So this was in the lead up to the probe. And of course, the EU is really going to do its homework before it launches something that has so many geopolitical ramifications. And what they have seemed to have found was that Tesla has benefited from a lot of these EV subsidies over in China. This is perhaps not a total shock, right? China has been trying to really lead the world on EVs. Tesla is a real sort of market leader in that. And Tesla's had also very unique treatment in China. It's one of the few companies, foreign companies, that completely owns its local operations there. But the question is, why does the EU care? And the answer is because a lot of the cars that are produced in China actually end up in Europe. About 100,000 of them so far this year. That's about 50% of the deliveries in Europe, which, of course, the irony being that the sort of biggest Chinese EV player that has deliveries in Europe is American, right? And so this supplements the output of the Tesla factory that's just outside of Berlin, a couple miles away from here. They've been trying to ramp that up. Perhaps they will do so with a bit more urgency given the geopolitical landscape.
All right, so we've covered the EU, we've covered China, we've even covered the United States. How does the UK fit into all of this, Ollie?
Right, so there's this debate about these tariffs that are supposed to come into force at the end of the year because of the rules of origin. And this is basically, where do the EV batteries come from? And unless you source them within the UK and the EU, you're going to be slapped with a tariff at the end of this year if you do not get an extension. So just to illustrate how far behind Europe is right now from China, China has 10 times the battery capacity of Europe. And by 2030, according to the IEA, China's still going to have 70% of the entire market. So by 2030, neither the U.S. nor Europe is going to have as much battery capacity as China has today. And this is what the EU and the UK are negotiating today. Will they get an extension, basically, so that you don't have to worry about those tariffs going into the end of the year? The auto sector has lobbied for this. They have said, basically, why do you want to make us even less competitive in Europe?
I mean, it's a completely valid point. We'll see, of course, how it plays out and how much momentum it actually has. Bloomberg's Oliver Crook, thank you for joining the program, walking us through those crucial stories. Coming up, climate spending likely to be front and center of France's new budget, due to be unveiled today. We're going to bring you the details next. This is Bloomberg. Former U.S. House Speaker Nancy Pelosi has spoken out against the divisions in the U.S. In an interview with Bloomberg's Francine Lacqua, Pelosi also talks about standing up to Donald Trump, the biggest geopolitical threats, and what she's learned from more than 35 years in public office. Take a listen.
We have an aberration in our country right now, but hopefully that won't last too much longer. But nonetheless, we still have to strive for unity. Sometimes you achieve it, sometimes you don't, but we have a responsibility to act in a bipartisan, unifying, transparent, accountable way.
Former U.S. House Speaker Nancy Pelosi there. And you can see the full interview with Leaders with Lacqua airing at 9:30 p.m. New York time tonight in the United States and 6:30 p.m. London time right here on Thursday. Now on to one of the biggest stories of the morning. The French government will present its budget today in a test of voter appetite for pouring public money into the climate transition, all while withdrawing support for inflation-hit households. The budget is also set to delay previously promised tax cuts. Bloomberg's Caroline Conan is all over the story, joining us this morning from Paris. Caroline, where do we see the increases? Where do we see the budget cuts?
So the French government has promised to find at least 16 billion euros in savings. A lot of these savings will actually come from the phasing out of the financial aid that households and companies have benefited since the energy crisis, in order to help pay for their energy bills. But the government has also decided to delay some promised tax cuts on production, something that has angered the business lobbies in France, and also delay some tax cuts that he had promised for households for a couple of years. However, in terms of spending, an extra 7 billion euros will be dedicated to the green transition. So the green transition budget for next year will go from around 33 billion euros to around 40 billion euros. So quite a big chunk there for the budget. Of course, the margins of maneuver for the French government and for the President Macron are very limited, because French growth is slowing down. The government expects 1.4% for next year. And of course, you have the high interest rates that are increasing the cost of financing debt. So the cost of financing debt in France will actually go from around 40 billion euros this year to more than 70 billion euros by 2027, which is the end of Macron's mandate.
I mean, there's some pretty lofty ambitions here. I mean, just the fact that we're talking about an increase from 7 billion euros to I think like 40 billion or something, it's enormous. He also presented part of that plan on Monday. How does that become a priority in the budget? How much support does he actually have to do that?
He does have, of course, some support from supporting the climate transition, but he knows he's working on very thin ice because remember back in 2018 when he tried to introduce a carbon tax that actually sparked the massive yellow vest movement and this big social unrest against the cost of living. So the government has to be very careful when it comes to taxes and spending on the green transition, which is why in this budget and in this green plan, they say we're not going to increase taxes. This is not how we're going to finance the green transition. So a lot of these 7 billion euros extra for next year will actually come from phasing out some fuel support for agriculture and construction sector. We'll see whether this angers these farmers and the construction sector. A lot of this money will go towards, of course, EV charging points, the production of EVs made in France. Macron wants 1 million of them made in France by 2027, but also some new regional trains around the big cities in France, and also solar, wind power, hydrogen. All this, of course, will be part of the green plan of Emmanuel Macron.
I mean, Europe has the advantage that it is actually economically incentivized to do that. That is not something the rest of the world shares when it comes to the green transition. Bloomberg's Caroline Conan all over that story. Thank you for joining us this morning. I want to stick with the continent and talk about the geopolitics in Spain. Spain's opposition leader, Alberto Núñez Feijóo, is facing a vote today in his bid to become prime minister. If the People's Party leader fails to get fellow lawmakers backing, he hands his opponent, Pedro Sanchez, a clear shot at forming a government. Joining us now for more, Bloomberg's Ben Sills all over that story. Ben, today is the first vote to elect the opposition leader. Things already aren't looking like they're going to be in his favor. Why even bother?
Well, I think that there's a question here of going through the motions, but also kind of respecting the political. It's almost like the etiquette. Feijóo came first in the election. He feels like he has a legitimate claim to be the next prime minister, and therefore to back that up, he needs to go and take the vote, even though he knows he hasn't got the support in the parliament to win it.
How does the Catalan pro-independence movement play into all of this? Of course, we know Spain has a lot of regional nationalism. Where does that factor in?
Well, the votes that will probably get Pedro Sanchez over the line to claim a third term will come from one of those Catalan separatist parties. He's cutting a deal with them to probably give them some kind of amnesty over that illegal referendum, which will allow their exiled leader to come back from Brussels. But more broadly, the Catalan issue has kind of roiled Spanish politics for the last 6, 7, probably 10 years, and it's really been one of the driving forces which has kind of broken down the old two-party duopoly that used to control the country.
I like the phrase as amnesty because, of course, we saw, I think, protests of something like 40,000 people or something in kind of contrary, I should say, to what Pedro Sanchez was trying to do with that amnesty at the core political, of course. Talk to us about what the Spanish people and the press are making of all of this.
Well, they're pretty divided. On one side, you have the conservative right, Feijóo's People's Party, but also Vox, which is a kind of more extreme nationalist group who are extremely angry about this. They say that Sanchez was before and will be again an illegitimate prime minister. And then you have the more liberal side of society, which is relatively sympathetic to the Catalans, not necessarily in favour of independence, but does want to see this resolved in a more conciliatory fashion.
A lot to digest here, and of course, we're going to watch that very, very closely. Bloomberg's Ben Sills, thank you for joining us this morning. Coming up next on the program, we hear from the Pegasus Airline CEO from the World Aviation Festival in Lisbon. That conversation next. This is Bloomberg. We're bringing you a host of interviews from the World Aviation Festival today. Bloomberg's Guy Johnson spoke to the Pegasus Airline CEO about jet orders, revenge travel, and the impact of those high fuel prices. Take a listen.
We see the demand. I mean, even during the COVID period, that 2020 and 2021, we received our delivery from Airbus 321 Neos. Yep. And this summer is the busiest summer we had ever had, because we had about 30% capacity increase compared to 2019, which was the last normal year. So this year we will be receiving 16 aircraft. Yep. This year, and going forward, we will have another 75 Airbus 321 Neos to be received. Now, the network is wide enough, extensive network in Europe, Middle East. We carry also connecting traffic because Istanbul is very well located. We have more than one base. The main hub is Istanbul, but then Antalya, Izmir, Ankara, other bases in Turkey. So we see the demand there for growth, for future growth.
Do you see demand slowing down? We've come out of the pandemic. Everybody wants to go on holiday, revenge travel. That is the phase that we've been in. Is that coming to an end?
It has come to an end. Technically and officially, you're very right. It has come to an end. That revenge travel has come to an end. But this doesn't mean that the demand is going down. The demand is strong. But last year, whatever we had put on the table, no matter the price, it was consumed. Yeah. This year, it is normalizing. I mean, customers are looking for affordable fares. Then they are checking the airfares to get the best, to find the best one. So that revenge travel has come to an end in this perspective.
So they were price insensitive, they are now price sensitive.
Like before COVID.
Okay, so we're back to normality there, which brings us on to the fuel conversation. Fuel prices, just been talking about it, rocketing higher. That obviously feeds through very quickly into the airline sector, depending on your hedging strategy. Does higher fuel mean higher fares?
The higher fuel, because the fuel is the main cost item of the airlines. So if you cannot protect yourself at the end, it means so. However, airlines like Pegasus, for example, we do adopt a hedging strategy there. This year, around 45% of our fuel consumption is hedged, for example. And last year, it's about 40% of our fuel consumption is again hedged. So it's a concern. And fuel price going forward is a concern.
Is demand strong enough that you can say to your passengers, you are going to take that cost?
Right now, we see the demand. I have no concern over the demand because September is strong. We see an extended summer into October and November. So going forward, looking into the future, the demand is there.
Pegasus Airline CEO Güliz Öztürk there with Bloomberg's Guy Johnson. Coming up later, we hear from IAG CEO Luis Gallego as well, joining us at about 11:45 a.m. London time. And the IATA Director General Willie Walsh joining us at 3:40 p.m. London time as well. And a quick reminder of our top story from Europe this hour. Italy seeking to turn Monte Paschi into the country's third largest bank by merging it with one of its peers. Markets not loving that story. You're seeing those shares down by about 4.3%. As, of course, we've learned that the government is holding informal talks with advisors. More developments to come. Stick with us. Up next, Bloomberg Brief with Danny Berger in London and Manus Cranny in New York, setting you up for what you need to know as the U.S. traders come online. This is Bloomberg.